in your view, has really been behind this changing character for the market?
You're right. Last Tuesday, Wednesday is now looking, in hindsight, admittedly, like a blow off top. And right now, I'll use the S&P as my metric, we're back to the lows of the move. We're down about 8% now. This is the largest correction we've seen both in the NASDAQ and the S&P since the March low. And we persistently make lower lows, at least we are today again. So this seems to be like the most serious correction we've seen in the market for the last 6 months. What do I think is the catalyst for it? If you look at the options market, the listed options market was out of control with speculation. The amount of trading that's been going on, especially at the small retail level. I know we all like to get excited about SoftBank, but they're a small player. There's been tremendous speculation among small and retail traders to be buying options, buying short-term options, play this market on the upside. And I just think it got overheated, and that's what we're seeing is the correction right now.
And I just want to go off that because I know it's something that we've talked about and gets a lot of play. Just like how much does the retail bid in the market matter? I have always tended to think it matters a lot more than people want to admit, because it's not cool to say that, someone with a couple $1,000 might actually matter. But the deal flow is sold to major players. And that's, in my view, like that's the marginal bid in the market, right? Institutions buying every day is not interesting. Yeah, that's most of the nominal flow, but the retail bid is real since the pandemic. And I think it does matter. I'm curious for your thoughts on that.
I couldn't agree with you more. This is the stock versus flow argument. That's the way that Wall Street tries to argue it. And on the flow argument, yeah, how big a deal is a couple of thousand or an account with a couple of $1,000s in it? Well, if they turn over the account every day and there's 15 or 20 million of them, and they account for about 25% of the volume on the New York Stock Exchange, that's what Citadel tells us, they matter a lot. Now, if you add in the options market and you see that the vast majority of options trades are less than 10 contracts with less than 2 weeks of maturity, you're up to about 45% of trading in the underlying stocks can be tied to this retail bid. That's a double from about 3 or 4 years ago. And on the marginal bid, the marginal price is set by these players. Look, if one of these guys comes in and buys a couple of hundred shares of Apple at a new high, the entire thing gets remarked to that high. That's the marginal bid. And they're there in force, and they tend to be fairly price insensitive. They tend to be more momentum players. So I think they matter a lot.
Jim, Dan Roberts here. To follow up on Miles's retail point, I'd be curious what you made of that report about SoftBank being responsible for a lot of the surge in big tech names mid-pandemic. And then, of course, I think people kind of overly jumped on that news to say, oh, everyone was making too much of the Robinhood effect. I think now people are probably making too much of that SoftBank report. And then since it'll get us into this, I just wonder what you think is next for the mega tech names.
Yeah, can I just answer it quickly by saying SoftBank, the world's largest Robinhood account, is basically what they are right now. They kind of act the same way as well. Look, they're about 10% of the trade. The other 90% of the trade is other players, and the retail bid is a lot of it. Look, Robinhood is just a shorthand for retail. There's a lot of those retail players that are Interactive Brokers and Schwab and Fidelity and E-Trade. So they're all over the place right now. What's next for the big FANG names as well? There's going to be a lot of people that have come out of the woodwork and try and say this is going to be a buying opportunity. We'll see whether or not they can generate enough interest in it in terms to get them to be buyers. There's going to be another group that's going to say, and this is the Davey Day Trader crowd. Hell no, I'm not selling. I'm never going to sell. Okay, we'll just keep taking it down until you rethink that position. And usually at that point, when you choke, is when the market makes a bottom. So we'll find out where that level is, if it's very close to where we are now or significantly lower.
And Jim, so we're talking a lot really about a market that seems like it's being driven by, momentum at large, right? Upside, downside, technical kind of factors. But I want to talk a bit about the fundamental backdrop and how you see things right now with what looks to be essentially no progress on any fiscal stimulus. The virus is certainly reappearing in Europe. It does seem to be going the right direction here in the U.S. All of this happening with an election now less than 8 weeks away. Just that fundamental backdrop for the markets. How are you making sense of it now after we've gotten through the summer and we've seen a pretty good rebound in the economy, but maybe a little bit of a flatlining in some of the labor and activity data?
Yeah, taking those one at a time, you look at the valuation numbers in the market, and let's use Wall Street's favorite metric, forward earnings, the forward PE ratio. The S&P just took out the 2000 bubble peak a couple of weeks ago. If you take out the FANG stocks and look at just the value stocks, that's at a new record as well, too. Market cap to GDP and other metrics are way up there, way, shall we say, stretched valuation, if not overvaluation. It's not a cheap market. And so you're not buying a cheap market, you're buying a momentum market. The election, that I don't think we've begun to price in. If you go with the betting market, which I'm a fan of, it's pretty close to a 50-50 election with Biden having a slight lean. If you ask Nate Silver or Charlie Cook of the pollsters, the election's over and Biden has won. But the betting markets think it's a lot closer than they do. So I think it's going to be a lot closer as well, too. You're right. The virus is taking off in Europe. France just made a new daily record today, taking it up from April, their old record. So that's not changing. What I'm trying to say here is, doesn't look good. The question you might ask me is, well, then why aren't you outright bearish if you've got speculation in the options market and all this other stuff? And the answer is, still got the Federal Reserve hanging out there, maybe at 8% down. They're not going to step in. But at some point, if this market continues to weaken, they're not going to go away without a fight. They're going to throw a couple more kitchen sinks at this market. The only question is when, and that should temper any bearishness unless we see that they can be totally ineffective. They weren't in March, and I suspect that this one will be tough for them to kind of they'll fight it, but I think they'll matter at the margin. That's what I'm trying to say.